Your CPP benefit. This is a very reliable source of income while you're alive. But few people will talk about your CPP when you pass away. What will be the consequences to your loved ones? Do your benefits continue to pay out? And by knowing this, also, they'll be able to transition financially smoother than if they did not know about it. So we're going to discuss this, but first, make sure to hit the like, subscribe, drop a comment down below. And also, if you haven't met me before, my name is Leon Mann. I'm a licensed wealth consultant with Money Assist Financial. And what I do, I help hardworking folks add an additional multiple 6 to 7 figures to their retirement portfolio. And I also help them to protect the hard-earned money during retirement. Now, the first question that many people ask when you passed on and your loved ones are there to collect it is, will your CPP payments stop upon death? The answer to this question is yes. Your CPP payments will stop upon death, but it does not happen automatically. When you pass away, and let's say they sent one check 1 month after you pass away, then once they know about this, then that check will be returned to the government. But it's up to your executor or your loved ones to call Service Canada and inform them of your passing, and they will stop the CPP payments entirely. Second, is there a death benefit with CPP? And the answer to that is yes. There is a death benefit, but it's a taxable death benefit that the CPP will provide your beneficiaries upon death. And this death benefit is payable up to $2,500. It is a lump sum benefit. However, unlike a life insurance, this is a taxable benefit, which means that you will have to pay taxes on it when it's added to your income. But the benefit is there to pay for funeral costs and also to pay for any bills that the deceased loved one has left behind. So the first thing, yes, there is a death benefit, but it is not automatic. So once someone passes away, it is up to the loved ones to call Service Canada and to get the forms required along with the identification in order to receive the death benefit. Second, will your spouse also be entitled to the death benefit? And in most instances, the answer is yes. Your spouse is entitled to receive what we call a CPP survivor benefit, which is a monthly benefit. Maximum could be up to $904. However, it will depend on many factors, including it will depend on how much contributions the deceased person has made. It will depend on whether or not you as a survivor is collecting CPP or not. For example, if you are collecting CPP, then the death benefit will also be paid out, but partially. The full amount will not be paid out, but the partial amount will be paid out in addition to you collecting CPP. Now, the third thing is, will the kids be able to receive a death benefit? The answer, also yes. The kids will be able to receive a survivor benefit, also known as a child survivor benefit, up to $307 maximum per month per child. By the way, there is a catch. You see, your kids have to be attending either school or post-secondary education. And if they're between 18 and 25, they have to be attending either university or college. But any kids under the age of 18 and who is attending school full-time, they're entitled to receive a child survivor benefit. But if they're too young, it will usually go to the caregiver. If the kid is older than 18, then it'll be passed on directly to the above 18-year-old adult kid. This is how the child survivor benefit works. Now, what you need to know is that when someone passes away, number one is to call Service Canada. inform them of their passing. The second thing is you want to stop any direct deposits as much as possible. The third thing is you want to apply for the survivor benefit that comes with the CPP. The fourth thing is you want to make sure you review the deceased financial plan to see what needs to be done. And the fifth, it may be very useful to work with a financial professional in this regard, as they can guide you through the process of applying for the CPP survivor benefit, as well as show you how you can make full use of your cash flow coming in so that you're able to pay off any bills on time, and you're able to also invest some of that for the future as well. Now, why is this important? Well, as I mentioned before, with the CPP death benefit and survivor benefit, it does not happen automatically, right? You have to make a call and apply for this with the necessary documents as well as valid ID in order to receive these benefits. And also, with the CPP survivor and death benefit, it is just a reminder that CPP is just a part of a retirement plan, but you also have to include things like insurance, tax planning, wills, and estate planning as well. Because the CPP death benefit, yes, it is the amount, but it may not be enough to cover death, which can be $10,000 to $15,000, right? So it is just there to pay out the bills, but you still need more to come. In addition to this, the CPP, while you're alive, it does pay out, but while you pass away, it does pay out a survivor benefit to your surviving spouse, which is a big bonus. But by knowing this, then it's just as important to know while you're alive. If you found value in this presentation, by all means, feel free to hit a like, subscribe, or drop a comment down below. And also, feel free to check out my other videos where we turn it up a notch. I thank you guys for tuning in. Until next time, peace and love. Take care.